as the S&P has broken above your downtrending line, we are now firmly in a new kind of area for markets where I do think in the coming weeks we could see the S&P break out to higher highs. Now, if the trend continues that we have seen in recent weeks and months, we should see a broadening of our markets. We should see more participation, and specific areas that I am bullish on include AI software, industrials, cyclicals, value, and really everything besides big tech. And here on the day today, we do have some big news to share, like retail sales data, some new comments from Treasury Secretary Scott Bessent, and well, I think we should start off this video with Nvidia's new 13F filings and what they did with their position. So Nvidia, they reduced their position in ARM by 52%. 52%. They reduced their position in Applied Digital by 7%. That was seen as very good news today. Applied Digital up over 15% today. Recursion Pharmaceuticals, another big winner today, up 3%. Nebius Group, one of my favorite stocks right now, while Nvidia bought $33 million worth of this company, about 1.2 million shares. That is a completely new buy. WeRide is also another big addition today. That stock up almost 100%. They bought about $24.5 million worth of WeRide. Serve Robotics, they sold out of completely. SoundHound AI, they sold out of completely. And NanoX Imaging, they sold out of that completely. Now, again, as I have shared with you, NBIS or Nebius is one of my favorite stocks right now. George Soros and Soros Capital also unveiled a new position in Nebius today, making up 2.7% of its portfolio. The fund holds 630,400 shares in Nebius. And yesterday, Nebius subsidiary Avride announced that their delivery robots are now live in Jersey City. This marks the company's third city with Uber Eats and the first to feature autonomous deliveries in the East Coast region. Now, just broadly speaking, looking at our markets, indexes are mainly in the red today. Russell 2000 is down 0.25%. The Nasdaq is up 0.1%. S&P is about break even, and the Dow is down 0.25%. The VIX is falling 1% today following the economic data that came out. Bond yields are down about 5 basis points at the time of recording this video. Oil is down 0.5% following news that in North Dakota, cold weather is, while slowing down oil production, 60 to 90,000 barrels per day. But really the big thing dragging down oil prices in the past couple of days is the proposed peace talks with Ukraine. Ukraine, Russia, the US are set to meet here in the next couple of days to discuss the actual details of what a peace plan could look like. US Treasury Bessent says Trump wants frictionless trade. US Treasury's Bessent says we'll see how trading partners respond. If Trump needs to, he will implement tariffs. And apparently the Pentagon is preparing for potential cuts from Doge. We did get retail sales that came out well below expectations. We were expecting negative 0.1% month over month, and we actually came in at negative 0.9% month over month. So that was much weaker than expected, which let's check together what Treasury yields are doing. Treasury yields are down 7 basis points on this data today, down to 4.45%, below that important level of 4.5%. So this retail sales data is actually pretty important, and I think that's why you have a lot of risk on areas of our markets actually doing well today. Now, export prices month over month came in at positive 1.3%, not exactly great. Import prices month over month came in at 0.3%. And then you have industrial production month over month at 0.5%. Capacity utilization at 77.8%. That's actually moving up. Business inventories at negative 0.2%, which should bring down the estimate for GDP, especially with that business inventory number. And yep, Yesterday, we were at 2.9% expected Q1 GDP. Now we are at 2.3% expected GDP for Q1. So that was actually a big downward revision to the forecast, if you will, based on the data today. The CNN Fear and Greed Index today is moving lower a little bit, down to 45. Yesterday, you were at 46. The percent of stocks trading above their 50-day moving average moving up a little bit, up about 1.6% today to 52.59%. And again, your AI investor sentiment survey that came out yesterday shows bearish investors are at a multi-year high. You have not been this bearish since like 2022, early 2023. So yeah, investors are very fearful at 47.3%, neutral investors at 24.3%, and bullish investors at 28.4%. Now, keep that in mind because the S&P has broke to a new all-time high today. But more importantly, you're breaking a downtrending pattern we have been in for about the last month or 3 weeks or so, where you've been downtrending, finding resistance at this trend line. You're now above that pretty firmly. This could break us out to a new range, potentially SPY in the 620s or so. Could come as soon as next week, although I do expect it will come over the next couple of weeks. You can also see sentiment for the SPY over on StockTwits, which is a pretty good barometer to kind of judge what retail investor sentiment looks like, is extremely bearish at 23. Yesterday, you were at 19, which was extremely bearish. So actually an improvement from yesterday's sentiment. But considering markets hitting a new all-time high today, I mean, as a contrarian indicator, that to me seems very bullish. And really simply, as I explained yesterday, with the tariff announcement that we had yesterday, it's really just alleviating a lot of the uncertainties that we potentially had around reciprocal tariffs. We're going to learn more information in the coming weeks, and we're expecting these tariffs to actually be implemented on April 1st. But it's just alleviating the uncertainty that is positive, because human nature does not like uncertainty in every aspect of our lives, as I have explained on this channel previously, whether it is a pizza delivery or getting a taxi ride, or no matter what it is, you taking a flight, or you know, your wife calls you and says there's, you know, something important we need to talk about when I get home, and you know, you're like, oh my gosh, I kind of want to know right now. Like, you don't like the uncertainty, okay? This is seen in every aspect of our lives, and it's not different. It's no different for markets and for investors as a collective. We hate uncertainty, and we do now have a little bit more certainty on what the tariff picture could look like. That's kind of important heading into next week, because you don't have a lot of economic data. You don't have much of anything going on from an econ standpoint next week, but we do have more earnings next week, and that's probably going to be the main story, but without any real, you know, big catalyst. Given we have a lot of uncertainty that was just alleviated, we have certainty on inflation, on the Fed, on the jobs market, on, you know, the tariff picture. There's not a lot left here to be uncertain about and to be, you know, fearful about. So from that perspective, I think this could be a breakout moment for markets, which again could firmly set us in the 620s for the SPY. Again, 620 on the low side, which would represent upside from here of about 2% or so, or on the high side, you could see something like 630 on the SPY, which is upside of about 3.5% from here. And this could happen pretty fast. This could happen within the next week or so, in my opinion. Obviously, I'm not a financial advisor, so come to your own conclusions. That is going to do it for this video. Thank you for watching. Let me know your thoughts down below in the comment section. Are you bullish? Are you bearish? How do you feel right now, just judging off of the, again, AI investor sentiment survey? Most of you are probably bearish, so this take probably doesn't doesn't sit well with a lot of you, but that's why I would love your opinion down below in the comment section. Have a fantastic rest of your day, a great weekend, and I will see you in the next one.